The news of the day. Are you guys ready? Let's get into this. All right. So, if you have any questions on any of these news items or things that are going on around the world, or any questions on any other areas, what I want to encourage you to do is ask your questions in the chat. All right. So, now let's go. What I want to go through is story number one. U.S. Senate votes to reverse Trump-era loosening of methane emission rules. So what is this about? Well, the U.S. Senate has voted to tighten methane regulations, reversing Trump-era policy. The Senate overturned loose Trump-era EPA pollution control standards for U.S. natural gas producers. And Ann Austin, former EPA official under the Trump administration, suggests that smaller energy companies may face large increases in production. Now, of course, this could be sour grapes because she's coming from the prior administration. But I would also say that it's always big businesses that benefit. In fact, what I'd like to share is my thoughts on regulation. When I was a young person, I thought that regulation was good and was important, but also that companies didn't like it and they fought against it. But what I learned as I grew older is that large companies love regulation. Why do they love it? It's because it gives them a competitive advantage. It makes it harder for small players to come into their industry. And the big players have all the money in the world to set up their legal departments that deal with this regulations. So let's look at this in a little bit more detail. So large gas producers gain from methane regulations. The top U.S. gas producers should benefit from the regulatory challenge faced by small producers. So yeah, it may be that there's a little bit more cost for the big players, but for the big players relative to the small players, it's definitely an advantage for the big players. Investors could consider U.S. gas producers, three of them that have seen their share prices fall, Royal Dutch and Exxon and BP. Now, these aren't all U.S. gas producers. In fact, only one of them is. That's ExxonMobil. But the other gas companies may see some benefit relative to the smaller. But ultimately, it's a negative for the industry, but it's a positive potentially for the world. Now, next, the Fed leaves rates unchanged, and here's what experts are watching now. This is a CNBC article, and the FOMC on the 28th left rates unchanged at between 0 and 0.25, meaning interest rates are at 0. And they maintain their monthly pace of buying bonds at $120 billion. That's more than $1 trillion worth of buying of bonds per year. And the pandemic continues to weigh on the economy, and risks to the economic outlook remain. Remember, when the government is buying bonds, they're injecting cash. When the Fed is buying bonds, they're injecting cash into the economy. So is the FOMC policy really addressing the problem? Well, FOMC intends to keep rates at current levels until labor market has reached full employment and inflation has passed 2%. And concerns by various experts, of course, are, well, we could be continuing to inflate an asset bubble by having such low interest rate, and higher rates and inflation expectations are ahead. So let's just look at this one for a moment. The point is that the stock market benefits when interest rates are low because future cash flows are discounted at a lower and lower rate. In addition, companies are paying less for interest costs, which means net profits rise for shareholders. Now, of course, we know that net profits are probably going to start to be taxed under the Biden administration, but the point is that ultimately you can feed asset bubbles. Now, the other question that everybody's worried about is all this Fed money printing causing inflation, particularly inflation in the U.S.? As of right now, well, we already have asset inflation with the stock market being so high. We have inflation happening in other parts of the market, housing markets getting inflated much higher, gone up much higher than what shows in the CPI. We know that oil prices are rising. There's inflation in a lot of places right now, but it's not feeding through to those top line measures that the Fed uses. In addition, in a normal case, take an example like Thailand. If the Thai government or Nigerian government or the Spanish government or whatever government that has its own, let's say, has its own currency, it's a little different for Spain if they're using the euro, but for a country that has its own currency, if it started printing a massive amount of money in its own currency, what would happen is that people would sell off that currency and it would collapse. But that's not happening with the US dollar because it has reserve currency status and also because it has the largest military in the world. So it can fight off through those means any pressure that it's maybe feeling on the currency. But eventually, my prediction is that is not going to remain. Eventually, the dollar is going to get hit and we're going to see the dollar fall. And when that happens, of course, that means imported inflation into the US. But it also means that other countries are going to see their currencies appreciate relative to the dollar. And I just think that dollar assets, there's a risk of holding dollar assets right now. All right, so let's go and look at the next story, which is Hong Kongers moving to UK may sell $19 billion worth of homes in Hong Kong. This comes from Bloomberg. So let's look at it. Hong Kong's migrate to the UK. Hong Kong experiences a rise in home sales. The UK government is offering Hong Kongers with British national overseas status to obtain citizenship. This is prompting migration and a rise in home sales transactions. In fact, transactions have surged by 44% just recently. So it's a pretty massive surge there. Now, the real estate market in Hong Kong is likely to be unaffected by an increased supply of properties. Why? Well, in theory, this rising property or rising supply should cause a price slump. Higher supply, prices fall. However, mainland Chinese investors are absorbing this increased supply. In the first 2 months of 2021, mainlanders bought 40% more residential properties than a year ago. And Hong Kong properties could be attractive, in the next years. But for right now, I would say we're not going to see the dip that it would appear that we would get from the sale. And let's just look at that for a moment. It's a tactic that is happening in Hong Kong right now, is that the more mainland Chinese that are able to move in, it's changing the composition of the population. And as that change in composition happens, what happens is that voting ends up voting in favor of the mainlanders. And so that is one major way that shift is made. So in fact, you could argue that China probably welcomes the British government giving citizenship to the British nationals overseas. All right, let's look at the next one. Biden extends Trump's China policy, more predictable yet more chill, according to a Global Times editorial. So this is an editorial article I was looking at. This is not a news article, it's an opinion article, but my valuation masterclass students were looking at it. So let's take a look. All right, increased tensions between two superpowers. China and the US have been increasing their maritime military presence in both the South and East China Seas. Biden administration is to continue supplying Taiwan with arms sales despite China's opposition, and Trump's tariff policy on China is likely to continue. US and China relationship basically continues to have friction. However, US and China may set boundaries separating economic and political spheres as Biden may try to move away from Trump's policies. But tariff reductions on Chinese imports, as the Biden administration potentially loosens the tariffs, what we could see is countries that have benefited a lot, like Vietnam, Argentina, Malaysia, could struggle. Now, again, I think that this is an important point. We have a real risk of a war happening between China and the US. My argument is I don't see that China has a strong desire to cause a war with the US. In fact, to cause a war with a country where the military budget is probably 50 times bigger than another doesn't make a lot of sense. However, I do think that what we're going to see is the Biden administration is full of a lot of war hawks. And I believe that we're going to see continued rise in tensions between China and the US. And I think ultimately that'll probably end up happening with some kind of skirmish happening in the South China Sea. Now, if you look at the news from China, they complain about the US being in the South China Sea. And if you look at the news from the US, They complain about China in the South China Sea, particularly encroaching on Taiwan. But there's two sides to every story. That's what Mom says. All right, next. Oil prices end at a 6-week high on OPEC decision, and it's signs of stronger demand. So demand for crude oil could signal recovery in global trade and demand for consumer products. Crude oil prices increased 21% between February 2021 and April 2021. That's a pretty massive increase when you think about it. OPEC is aiming to increase supply to meet this demand and hopefully bring down the price a bit. Demand for oil could be a recovery sign that, as we get out of the COVID pandemic situation. And earlier, been talking about and thinking about inflation, and we talked about that in one of the prior stories. The point is that oil price is a major component to most businesses. Businesses that are heavy in transportation, you think of Coke or Pepsi as an example, they have to transport a lot of stuff, a lot of the sugary stuff, and the fact is that's going to increase the price for them. And so the price of oil is going to increase their transportation costs, which could increase product prices. So mortgage refinancing initiative to help lower income borrowers. So federal housing regulator says program could help mortgage borrowers refinance at lower rates. Let's look at this mortgage refinancing initiative to help lower income borrowers. The Federal Housing Finance Agency announced plans to ease credit requirements and waive certain fees. This new program could help low income borrowers lock in with low interest rates. And housing price rise probably is going to continue. Housing prices have risen over 10% in the past 12 months. And Fitch Ratings has estimated that they're 8% overvalued. Now, this initiative should reduce the number of distressed properties, and it could support housing prices in the longer run. Now, this is also an interesting story because, one of my nieces, Sophie, just told us that she bought a house and she borrowed money to do that. Now, it seemed kind of strange to my mom, who had been born just out of a Great Depression era. Mom was born in 1938, so she was born just after the Great Depression. But it seemed kind of odd that someone would buy a house in the middle of an economic crisis. But hey, guess what? Money's free. The Fed's interest rates are so low. And remember that the U.S. housing market is different from the housing markets around the world in that basically the U.S. has found a way to do long-term fixed interest loans. What do I mean by that? That a person like my niece could buy a house with a 30-year mortgage and pay an interest rate that is fixed of, let's say, 3 or 3.5%. Now, that means that she's paying the exact same amount throughout 30 years, no matter what's happening. If interest rates go up to 6 or 7 or 8%, she's still going to pay 3.5%. How does the U.S. do that? Well, they do that not through the banking system, because the banks can't do it. The banks cannot give 30-year loans. Why? Because their depositors are depositing money. Think about people who are depositing their salaries into banks, and then they're drawing down that salary. So if you look at, I haven't calculated it in a while, but last time I calculated the average maturity of deposits at banks, it was about 4 months. 4 months of maturity, and then they take that money and lend it at 30 years. It's impossible because the funding could rise very quickly and the lending doesn't necessarily rise that quickly. So how does the U.S. do it? Well, they created a secondary market for mortgages, and they did it through Fannie Mae and Freddie Mac, which they did after World War II. Basically, Fannie Mae and Freddie Mac are government-related entities that use the credit of the U.S. government to borrow long-term at very low rates. And then Fannie Mae and Freddie Mac buy these long-term fixed-rate bond or mortgages off of the banks, and then the banks get cash for that, and they go about their business. Now, there's a great book. I don't know if I have it on my bookshelf right behind me, but it's called Hidden in Plain Sight, and it explains the causes of the 2008 crisis. But one of the big causes is exactly what's happening and is described in this article. The U.S. government pushed banks to lower the requirements on loans to help people and get more people into mortgages. But the problem is it caused a lot more people to come into market, and that just pushed up the price of housing until eventually we had a crisis. So now let's look at the last story of the day. Saudi Crown Prince says the kingdom's in talks to sell 1% of Aramco to a leading global energy firm. So let's take a look at this in more detail. Saudi Arabia is planning to sell 1% of the world's biggest, it was originally the biggest IPO company, and the Crown Prince of Saudi Arabia is considering selling this 1% to a huge leading global energy company in a huge country. You know, could be ExxonMobil, could be British Petroleum, could be Royal Dutch Shell. We've seen a few lists of names earlier today. Now, it's equivalent to about $19 billion based upon the current market cap. So, reducing risk and expanding sales channels is what they're possibly doing. The aim of this acquisition could be to increase sales to the country that this future partner is based in. It could be they're trying to secure more sales. It could also signal that Saudi Aramco is trying to diversify financial risks and expand its sales channels. It also could mean nothing, just a 1% stake sold. So that wraps up the news of the day. I'm going to take some questions as they come in. So let's go into questions now. And hold on, let me get here. Okay. So let's look at the questions that we've got. All right. So first question. First question comes from Ravi. Do you believe that regulation also destroys value, or does it help create value? So, ultimately, we need regulation in society. Even though I lean towards a libertarian, meaning you leave people and companies alone so that as long as they don't harm other people. But we do make a pact between people in a society to say that we are going to pass some laws that we're going to say protect the overall society. So I do think that regulations are necessary and they're good for society. Now, generally, if a government gets so strong that they just keep putting more and more regulation and it becomes unrealistic, then you have a problem of regulation eventually destroying value. But from an overall economy and, let's say, society perspective, regulation's not bad. Now, what I would say is that I've learned over the years that regulation is really, really favors the big companies because small companies just don't have the capacity to deal with it. All right. Next question. Titigon. When do you think they'll move up interest rates? I think that it's going to be a while. The Fed is not going to want to move up interest rates. They don't want to see interest rates rise. One of the biggest reasons is because the U.S. government is borrowing so much money that if the interest rates were to rise, let's say the U.S. government's cost of funding right now, let's just say it's 2%. I know it's even probably less than that, but let's just say it's 2%. If the U.S. government's funding went up from 2 to 4%, it just doubled. The interest rate doubled. We're talking about probably 50% of the overall amount of budget being spent by the federal government going to interest costs. So they really can't afford it. But that raises another question: interest costs, interest rates. The market wants to push up rates because they're afraid of inflation. So you are seeing interest rates rising, particularly at the long end of the bond yield curve, because the government has less control of that long end. Now, that's part of what Operation Twist was. That's part of what the Fed is either doing or considering, and they want to try to keep rates down. But eventually, the market may break it. Next question comes also from Titigon. Do you think we should prepare for the big short? Well, I do think that the US dollar, there's a lot of risks there. And I believe that there's a lot less people going long the dollar these days. And the cost of hedging dollars has risen a lot. So I would say that there is some risk with the US dollar and some risk with the US stocks. But remember, US stocks mainly have been supported by the six largest companies in there are tech companies, and their profits are below out high. So the rest of the market actually is not that high. Let's look at the next question. Okay, Munling says, if Hong Kongers are moving to the UK, do you think there will be a surge in prices in the UK property? Yeah, the problem is that the UK property buyers are, let's say there's 80 million. I'm not sure what the total population is in the UK. And I would say many of these Hong Kongers, even if all of them come and they want to buy, I'm not sure if it's going to have a huge impact. It also depends on what amount they're paying. Are they buying low cost housing, expensive housing? I would say a marginal positive for UK prices, but probably not huge. All right, next question. Very interesting. Thank you. Oh, that's even better than a question. You are welcome. I'll do my best. All right. So Sutjai says, what are your viewpoints on financial experts regarding the possibility of an asset bubble? Yeah, I think there's definitely there's beginning. Now, keep in mind that I've talked about the tech companies. We know that they're expensive, but they are making a huge amount of profit. So are they in a bubble? The reason why the tech companies could be in a bubble is if we see tech profits start to collapse. And if that happens, then we really see that they're very expensive. There's a lot of companies in the US that are still relatively cheap after the crisis. But overall, I would say there's a small asset bubble going on in the US stock market and also in the US asset market, meaning home prices and that type of stuff. Next question. Chris says, what's the worst case that's going to happen between the US and China? Well, I don't think that China is going to pursue a hot war. I think the worst case is you're going to see two ships firing on each other. You may see the US trying to defend Taiwan and block China from getting in there. And then I think you will see cyber war coming up. And that is, what I'm thinking is probably the next step of what's coming. We've already seen the US and China kind of splitting when it comes to technology. All right, next question. Sutjai says, do you agree the Fed policy in keeping interest rates unchanged and injecting more money in the economy despite signs of recovery? Well, I think that the Fed is stuck. They're really screwed because basically for many years, what they've been doing is keeping interest rates low and feeding the politicians' desire to borrow money. And now we're stuck in this situation where the government is highly leveraged, companies and individuals are highly leveraged, and COVID basically really squeezed. And now for the Fed to increase rates, it could be very, very disastrous for the Fed, for the federal government in the United States, but also for the economy. But some people would say, well, the Fed doesn't have a lot of choices. Well, part of it is that the Fed put itself in a box here. And so that's partially caused by them. Now, let's look at the next question. So Kritin says, do you think climate change mitigation policies will have an effect on oil prices? Well, I guess you got to make a conclusion about how much of a shift there will be from oil to alternative fuels. It sounds great, that there's climate change improvement and that there is a shift to alternate energy. But the truth is that oil is such a powerful force. Think about all the cars around the world that are carrying a tank of oil. They can carry it around and then use it to drive their car. Not all systems of energy are that convenient, that low cost. So although it sounds good, it is going to take time for alternative energies to come in, and they're going to be expensive. And I would say, think about it this way. How many people now are not using oil? Think about all the people that talk about climate change and then they get on an airplane, they get on in a car. These people really are still using oil because it's not a great alternative. All right, next question. Will there be a correction for the U.S. housing market? I think so, but again, what you see is the U.S. government constantly bails out the U.S. Taxpayer and also the U.S. Housing market, and when they do that, they end up continuing to keep prices up. Nobody wants to feel pain in America, and the Fed and the politicians never want to put pain on people. Next question is from Varut, says, is now a good time to buy a house? Well, if you're buying a house in the US, I think it's actually pretty good. Okay, prices may be a little bit high, but there are probably enough buyers in somewhat distress that you could find a reasonable price. But more importantly, from a tax perspective, you get a benefit from the US government because these are tax deductible expenses, but also you also get a super low interest rate and it's locked in. So if you take money and you put it into a house, instead of a house that costs 100, maybe you only have to put in 20 into that, and you can keep the other 80 and invest that in other things. And for that 20, you're going to make a fixed payment. And if interest rates rise and rise and rise, you're going to earn more and more and more on the 80 that you didn't put into the house, and the amount that you're going to pay on the 20 that the 80 of the house that you finance is going to be the same rate. So generally in the US, I must admit, most of the time for US citizens, it's a good time. For Thailand and other countries, it's a different story. There's less tax incentive. All right, let's look at next question from Robbie. Seeing the rising conflict in the South China Sea, would you see defense contract companies globally seeing an increase in revenue? Well, I would say that's the sad story of this. And, we have a lot of talk about ESG, environmental, social, and governance. And if people really cared about society, I would argue that we should stop investing in defense companies completely. What we can see is that defense companies, in my opinion, are out of control in the US. They're funding the politicians, and ultimately they just lead us into war because that makes more money for them. So I'm I think you got to be very careful. Okay, Robbie says, seeing the conflict. Okay, yeah, I've already got that one. And there's Gab. Gab, great to see you. One of our podcast guests. Great to see you. All right, next. Abdul, what's the name of the book again? Oh, the book, Hidden in Plain Sight. Hidden in Plain Sight. Where is that book? It's hidden in plain sight on my bookshelf. Oh, I can't find it. But I'll put it, I'll, if somebody can look for it, I think but it's called Hidden in Plain Sight. All right, next. Warut says, what could de-escalate tension? That's a really good question. And I think that that is kind of what I'm concerned about right now. It's very hard to de-escalate tensions. I think that the political state in the US is so divided and so divisive that there's just a risk that from a political perspective, it's better. It's a little bit like what you could call the racialization of communication in America, that everything is race. And then all of a sudden you start dividing people based upon race because of that racialization. And I think this China story is being pushed so hard in the US, a little bit like what's been done with Russia. There's nobody in the US that's going to stand up and say we should not be fighting with Russia. So I'm not exactly sure. I wish that we'd had some politician that would say we've got to stop this. Now, there is a former candidate for the US presidency under the Democrat Party, Tulsi Gabbard, and I'd say she is probably one of the more sane voices on it. But it's not going to be easy to de-escalate at this point, in my opinion. All right. Someone says, how about the U.S.'s reaction to China's de-dollarization? I think that the U.S. is going to go after China, try to make them suffer and try to get them back onto the U.S. dollar in any case when they go off, whether that's dealing with Africa or One Belt, One Road and those types of things. I think that they're going to keep going after them. All right. Let's see. How is come on, Porn. How is the U.S.-China tension going to end and when? Don't know. I'm afraid it's not going to be pretty. That's my fear. Okay, thoughts on the possibility of commodity bubble? Well, I think we've already seen some of that commodity bubble. And remember that oil is a major commodity, and we've talked about it going up by almost 20%. So I think we're kind of in the beginning of a commodity bubble. What happens to the bond market during the coming inflation? Well, generally, when inflation is rising, it means that interest rates are rising. And when interest rates are rising, it usually means that the portfolio of bonds that you're holding is losing value. So generally, inflation would be negative for bond portfolio. Next, from Titikon, question for the latest news. Do you think Saudi is moving away from oil and shift their direction to clean energy? Nope, definitely not. There's no point for them. Their whole existence is supported by that oil reserve that they have under the country. So yes, on the one hand, they may be making some small moves, but ultimately, I would say it's very hard for them to make a big shift away from oil. Next question. Do you think Saudi could be the world's leader for clean energy? I'm not convinced of that, but it could be. Let's look at the next one. Next question from Munling. Do you think there will potentially be stronger alliances between China and Russia? Well, absolutely. That's what we're facing right now. I would say China and Russia are being forced into the arms of each other. And I would say those two countries aren't necessarily going to choose to be partners, but basically the U.S. is going after them so strong that they're going to have to try to join together, I suspect. Okay, adding on to Ravi's point on defense companies, what are your thoughts on the recent U.S.-Iran encounter? Well, I think that the U.S. the U.S. has demonized Iran so much that I think at some point we're going to see, an attack on Iran. Now, we've already seen that a proxy happening through Israel. Israel has been famous for infiltrating into Iran and causing terrorist style of attacks and assassinations. So I think that there is some risk of that. Next question. Yeah. Sean says, yeah, oil is up 31% year to date. Commodity cycles are back. Yeah, so commodities are moving. In fact, in my all-weather strategy, I had shifted into 25% of the portfolio into commodities a while ago. Okay, next question from Minvo. Great to see you. Do you think U.S. stocks can keep going up till the end of the year? What might be the catalyst that could send bearish signals market-wide? I think a big catalyst is going to be when interest rates continue to rise and inflation is rising and the Fed doesn't really know what to do and it gets difficult at that point. I'd say that's number one. The second thing is that if we see antitrust and other attacks on tech companies happening, not only in the US, but in Europe and other countries, that you could see that the luster of the tech companies starts to fade. And if that happens, that's a huge thing that's supporting the market. The other thing to keep in mind is that the tech companies, by basically, you could argue, siding on more of the liberal side or the Democrat side or the Biden side, what's happening is they're forcing conservatives off of their platforms and onto alternative platforms like Gab, like Clubhouse, like, well, we saw Parler get kind of shut down, but there's more and more places, BitChute, we see Locals, a lot of different places where conservatives are going. So that could actually hurt their profitability. And yesterday, by the way, we did talk about the Apple changes and the changes in the App Store and the way that Apple's allowing companies to access their user privacy or user data means that some countries like Facebook could be struggling more. Let's say Shan said China is a new global macro and economic power. Yeah, I mean, I would say that they are a major player, but my perspective is the US, because it has a hold on the banking system, has a lot of power. Also, its navy is very strong. And the end result is that the US can probably hold off China for a while. The second thing I would say is that it's not my impression, and I know many people disagree. It's not my impression that China wants to take over the world and become the global power. Now, you say macro and economic power, not military power, and that's an important distinction. All right, Shan says, I like it. Kiss the dollar goodbye as digital yuan would enter the market very aggressively. It's possible, but I think there's a trust issue there that, it's going to be an interesting one. The countries that China trades with may probably have to trade with China through its digital currency. But yes, it is a major move, but I wouldn't say that it necessarily means the end of the dollar, because that could push the US to do digital dollar, and then people may feel more comfortable with that. Next, Robbie says, from rising oil prices, you see chemical suppliers that supply products to drilling and crude companies may win. No, in fact, chemical companies are usually downstream from the producers. So we have exploration, and then we have refining, and then that refining is part of that chemical supply. So if prices of oil is rising, if the price of oil is rising, that's actually increasing the cost for chemical producers. And chemical producers are producing ultimately chemicals that go into plastic products and the like. And the plastic products are being sold to consumers, and they may not be able to increase the price that much. So there is a little bit more of a squeeze on chemical companies. All right, next. Dollar goes down by 15 to 20 and 21. Gold hits. Yeah, I think it's possible. I wouldn't argue against that. And let's just see what your next prediction is here. Hold on. And the digital yuan would hit the dollar market transactions. All trade with China would be done in yuan. Yes, it's possible. So, there is some impact that I could see, but I would say it's not going to be enough at this point to overtake the dollar. All right. I'm not sure if we got any questions, but that was a lot of questions. I appreciate it. And it was also good input from Shan. So please keep it coming. And I look forward to sharing my take on the news tomorrow. Have a great day.